Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. Today was weekly expiry, so price action was all about positioning, option writers in control, and sharp moves around key levels. In today's video, we'll quickly decode how expiry played out, what today's structure is telling us after settlement, and most importantly, how we can build a clean, rule-based Nifty trade plan for tomorrow. No noise, no overthinking, just levels, market structure, and a practical setup you can execute with discipline. If you trade Nifty options regularly, make sure you like this video, subscribe to the channel, and turn on the bell icon so that you don't miss my daily trade plans. And before we start with the Nifty analysis, the link to the Telegram channel is in the bio. Make sure you are subscribed there as well. I will be sharing in news related to the stock market over there, along with my personal views. And I also plan to share some high probable trade setups whenever they are happening in the live markets once I have a sizable number of people who have subscribed over there. So make sure you are subscribed to the Telegram channel. The link of the same is in the pinned comment. Now let's jump straight into the charts. Nifty today opened with a gap up and it opened much above our entry criteria that we had set, much above the trend line that we had set. And at the very start of the day, Nifty gave a good pullback and a retest of the trend line as well. And entry could have been planned above this particular high as well, which was the opening 5 minutes high as well. But the stop loss would have been a tad on the bigger side. Plus, I was actually driving at this particular time. I got late today and I was on the roads and I reached office pretty late around 11, and that was the reason I could not look at this particular entire entry as well. And but then nonetheless, this could have been a good trade, but then because of the bigger stop loss, this could have been avoided as well. Now, post this particular move on the upside, Nifty moved slowly and steadily, creating a good structure. Out here, again, the structure changed completely. This was a good trend line which was coming in from the top, and after creating a bottom out here, Nifty broke out of this particular trend line, gave us a good pullback as well as you can call it a pullback as well as a retest of this particular trend line. And this is where I entered into the first trade of the day at the break of this particular swing high out here, simply because the overall outlook was looking very, very positive. After the gap up sustained, Nifty filled the gap and then completely the had gone up. Now this also kind of looked like a RSI cool off, wherein Nifty went into some sideways momentum, wherein RSI cooled off, and then we got a good clean breakout, a good clean retest, and there was nothing wrong to go out here, long out here, and the stop loss was right below this particular swing, which unfortunately got triggered. Now on the spot chart, you might not be seeing that the option prices got triggered, but then if you look at India VIX today, it was completely down, and uh, because of the India VIX being down, there was not great momentum in options. Now, this is the trade which I had taken in the options which are expiring next week. I am sure the same would be the story with options expiring this week. Although my stop loss was very, very small, just 5 points, and as soon as market triggered it, I accepted it. After triggering and taking my stop loss as liquidity, the markets immediately went up in my favor. But then again, this is what it is, and you cannot do anything about it, even if you are a victim of liquidity in the market. But the main uh, take home point out here should be that once you are entering a trade, number one, you should always have a predefined stop loss, which is logical. For me, it was right below this particular trend line. As well as this particular pullback which we had seen, simply because this was the closest swing which was there, as well as if the swing gets broken down, we are going back again kind of beneath this particular trend line, and that is the most logical stop loss that I could see out here. The stop loss, of course, could have also have been used, but then it unnecessarily why to increase your stop loss and take a bigger hit if you are wrong. So this was the most logical stop loss. And once the market hits and triggers your stop loss, you take it and move on to the next particular trade. You should not wait in anticipation, in hope of any kind of reversal of the markets, and then again the markets go back in your favor. So this was the first trade for me today on the expiry day when I took a stop loss of 5 points and then markets went in my favor. Post this new high which was made, markets gave again another good retracement, again tried to move up but failed. Now, this is what where I ask you guys to try and talk to the market is what exactly is happening. Markets made a new day high, failed, did not break this particular swing low out here in this particular retracement, tried an up move, right? But then did it succeed? No. And at this particular time, if you would being the expiry day, if you would have been observing the open interest, right? The major resistance was around 26,000. Now, I'm explaining what was going on in my head at this particular point of time. After this retracement, if markets started inching higher, 26,000 people who had actually shorted markets at 26,000 round number levels, they would have fled the scene, triggering a short covering. So that was one trade setup that I was looking at. Uh, 25,000 and on the lower end, 25,900 had the highest level of supports, followed by 25,950. Now, 25,950 and 25,900 uh, were the supports on lower end, and 26,000 was the resistance based on the open interest. These were where maximum option sellers were concentrated, and what we wanted to wait was see which side is fleeing, and if we get a trade on either side, also confirmed by the price action. Now, out here, after markets failed to make this new high, this low became of quite importance to us, wherein if this low gets taken out, we get a trade on the short side in as a double top, along with a good RSI divergence. Now, what do I mean by RSI divergence? Markets made a new high. RSI simultaneously made a new low. So this is the RSI divergence which was in play, and this is where I entered into puts in as the second trade of the day. And while these levels were coming down, while the market was going down, if you observed the open interest, you could see significant number of people exiting from the 25,950 put levels, right? A good amount of people had exited those particular positions, which was a short long unwinding. That is what you call the opposite of short covering is long unwinding. Basically, people who had long positions out here, once market started moving in opposite to their direction, they unwind their positions and trigger a trade on the downside. And this is where I entered into puts. And this was the exit candle, the 1:40 p.m. candle was exit. And while I entered here, the stop loss was right above this particular swing. If market was just came down here to grab some liquidity and then again moved up, I would have exited my trade out here. Now the positions, the quantity that I had taken in this particular short trade was quite less. Like I had clearly mentioned that whenever we are trading on the side which is opposite to our primary bias. Our primary bias is bullish based on higher time frame readings and market structure. And because of that, whenever we are taking a trade which is opposite to our primary bias, we take it in lower quantities, and that is the reason why this trade was taken in lower than usual quantities. But then again, out here you can see some big candles, but then because of the fall in VIX today, the momentum was not great. In all, I captured around 16 points in this particular trade, lost 5 points in again the overall. I was slightly only in green. The reason being, this trade was taken in a larger number of quantities compared to this particular trade. So although the number of points captured were more than triple of what I lost out here, but then overall I was just only slightly in green. So nothing major about today's expiry for me in the trades out here. Again, Nifty after coming down became a bit volatile, showed some strength, again formed a lower high. This was a good double bottom trade, right? Very absolutely clean price action, but then again, I did not participate because the breakout came in very late, right? It came in around 2:55, 3 p.m. I don't entertain fresh new trades. Post 2:30, 2:40 is the time wherein I close the systems and I don't look for any fresh new entries. And this particular move came in, again got bought into or sold into. And overall, mm, okayish expiry, I would say. Mostly it was a sideways expiry, not too trending. But then, of course, there was a couple of moves which were there. But India VIX today was on constant decline, and because of which options were not moving in a much more favorable way. Uh, so this was it about today's expiry. I hope I have been able to explain the chain of thoughts that are going on in my mind while I am in the live market, while these bars are not actually printed on the chart, and what am I going through, what am I talking to in the markets. Like out here, I clearly explained that we are closer to a round number level wherein there is a good amount of uh, open interest as well. And if we move up above it, we can see some short covering. If these people are strong enough, they will not let the prices go up above it, and then we can see some downward action. And when these people leave, it's right on the bottom side, we also marked our levels, and that is the reason why we took this particular trade on the short side as well, despite no particular uh, price action level being considerably there to take this particular trade. So I hope I have been able to explain the chain of thought, or how exactly do I plan my trades while in the live markets. Now for tomorrow, markets are right now, see, if you see, markets is currently only moving in gaps. You see a good gap up on an intraday basis, nothing much. Again, a good gap up on an intraday basis. So we are missing the trend that is always there in the market, and that is simply because I will the budget as well as the US trade deal price action, which was printed on the charts with this particular down move because the budget, and this up move because of the US India trade deal, and we are right now stuck in between these two bigger swings. But then nonetheless, we are, if we look at the entire range, so we are trading in the higher end of the range. Plus we are uh, today's price action candle is also, although last 2 days, like we can see, are complete dojis, which are showing that okay, the markets are not exactly prepared, or not exactly giving a sense of direction. But then the price action, again, our bias needs to be on the positive side till the trend changes. And if we look at the price action on the 1 hour or 4 hour time frame as well, again, uh, absolutely nothing much there. If we can extend this particular trend line for tomorrow, and do we also have a trend line which we can draw based connecting these highs? Absolutely. Beautiful trend line coming in from the top. This particular trend line being extended. So tomorrow's plan of action again is very simple. I will not be complicating things. Above this last swing that we have seen, if we see a breakout and continuation with a pullback on the upside, this is what we plan to trade. I'll wait for this little swing to be taken out. If we see a price action like this out here on the downside, this is what I plan to trade, right? Hopefully, markets will give us some uh, trending moves very soon, but then let's wait for it. Do not rush into trades, and yeah, keep your positions light. So that's it for today's Nifty expiry breakdown and tomorrow's trade plan. If this video helped you get clarity for tomorrow's market, do hit the like button. It really supports the channel. And if you are serious about trading Nifty with a simple, disciplined, and rule-based approach, make sure you subscribe to Your Nifty Guy. I will see you in the next video. Until then, remember, protect your capital first. Profits will always follow discipline. Cheers, and thanks for tuning in, guys.